Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Tuesday, February 28th. This will be a technical analysis breakdown. So if you are someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. Real quick, a couple of clarifications. Number one, the price you see there will be changing, and then the candlestick you see right there will be moving around. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. Second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, AMC. I realize they have earnings here, but regardless, huge movement today. A lot of people trying to play this one apparently before earnings with the volume surge right here. Got the very nice breakout of that area of resistance that I've talked about in former watch list videos. So overall, things are looking very, very interesting as we head into earnings and headed into there. Map out a couple of key levels to watch as things play out. And the first key level that you got to think a lot of people will be watching is that $8 mark, which is essentially the top part of this pattern here that has formed. So I want to get this second part of the pattern into play there too. Let me change that to green to represent more so the bullish part of the pattern. So change that to green there. And then just to make maybe the pattern easier to see, let's keep it one color. So we have our resistance, we have our support, we have the big afternoon explosion right there. We'll put our golf ball down here to make it a little bit more visual for you golfers. We have ourselves a bull pennant pattern. So that's really the easiest way to summarize this one as we head into earnings. Bull pennant pattern, and you got to think that the question on most people's minds is, can the price get up to the top part of that pattern, again at $8, and again, then get the breakout through it? That'll be the key question, and that's the dynamic that you got to think most people are watching. So let's keep an eye on $8 and see how AMC behaves relative to it after earnings is released. Next one, LHDX, and this is a very interesting one because sure, the price did pull back quite a bit after the move upwards, and this is a very bootleg trend line, but it'll get the job done. But what we noticed this afternoon is that, well, the price has actually now broken back up through that trend line, and you have a nice green candle there, and this was all occurring on a very respectable green bar down there. And all these things allows us to now ask the question, which is a very exciting question to ask, is, okay, is this the start of something bigger? Now think about that question though. If nothing were to happen, can you even ask that question? No. In fact, lots of stocks out there, it doesn't make sense to ask that question because nothing worthwhile even happens. But when you can ask that question, of course, that doesn't guarantee anything. Those don't exist. But again, that does imply that something worthwhile has happened because for all we know, maybe this is indeed the start of something bigger, and this thing is just going to really get moving in the upward direction. To be fair, maybe it's not. Maybe this thing rolls back over. But like I said, the point here being is, well, maybe this is the start of something much bigger, and you're going to have some sort of big move in that upwards direction. So if you like to play penny stocks, and if this catches your eye in terms of, all right, is life starting to come back into play here? Definitely keep an eye on it. Next one here, TRKA, very, very nice pattern. So once again, for you penny stock players out there, going to get this drawn into play. Key breakout point of that pattern right up there at 43 cents. Support part of the pattern right there. So again, let me change that to green to represent the bullish dynamic of things, given that as a support. And then to keep it all the same color, we have resistance, we have support, we have the big upwards move here, we have the golf hole down here. So we have ourselves another bull pennant pattern. So maybe you like to play penny stocks and you like bull pennants. So AMC, which does also have a bull pennant, just a little bit out of your price range. Then here you go, another bull pennant on a penny stock, TRKA. So keep an eye on it. Next one, AWIN. And yes, this is a very nasty looking chart, a rough looking chart. But you longer time viewers, you know what I'll say next. There can be opportunity in the ugly. And yes, this is an ugly chart. But what makes this oh so interesting is the price of this very nice, what we would call hammer candle, right down here at, we can see forming right now. Again, it is still moving around because the markets are open. But what we have here is this nice little candle forming at two key levels. First key level, that purple line there, the 50-period moving average. Other key level, this $1.75 mark, which was a former area of resistance. And just basic technical analysis, when levels of resistance are broken and closed above, they tend to act as support. And so far, so good, it is acting as support. Now, let me be very clear once again, there are no guarantees. So just because these dynamics are occurring does not mean for sure guaranteed a price is going to bounce. Maybe this is just a temporary pause and this thing continues to crash and bleed and bleed and bleed. That's why you have to be disciplined for these sort of situations. But from a risk-reward scenario, meaning what is being risked relative risk relative to what is, you could potentially get if the price bounces back upwards, you could have yourself a very nice ratio that you create for yourself. So if you like this price range and you like to play these situations where, yes, the chart does look ugly, but it is sitting at a very interesting technical area, then I'd certainly keep a close eye on it. Next one, FSR, and I'm going to go through this one very quickly because you've already heard me talk about this via the pattern. So we have our area of resistance right here. We have our support level right there. So change that to green, and then I'll just get the pattern drawn out. So like I said, I'm not going to repeat, waste your time repeating things over and over again. Resistance, support, big upwards move there, golf hole down here. So we have ourselves another bull pennant pattern. So if you like bull pennants, then as you're seeing here, you're getting quite a bit of variety headed into Tuesday. Real quick, want to take a break and personally invite you to get signed up for this free live online class. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency to manage risk, then certainly get signed up for the free training. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying what you've seen, then definitely get signed up for the free training. Next one, CFRX, and I'm not going to call this one totally ugly. I mean, it's not the best looking chart, but it's not nearly as ugly as the other one we looked at, AWIN. But same general idea here is, yeah, this one had the big move up. Yeah, it's pulled back, but in pulling back has created a nice little pattern here that I think a lot of people will be watching. In fact, it's one of my favorite patterns, and this is what I would classify as, and maybe some people would disagree. Maybe I'm trying to force a square peg through a round hole by calling it this. But regardless, the point being is that, in fact, you know what? We don't even need to do that. Let's just use that moving average as the bottom part of this pattern here. So pattern-wise, we have the resistance, and like I said, we'll just use this as the bottom part of the pattern, and we'll call it a poor man's falling wedge pattern, which is actually a bullish pattern. So falling wedges you would think are bearish, but actually the rising wedge is a bearish pattern. So falling wedge here, well, as I've said, and we'll probably say a dozen more times, no guarantees, but is it valid to think that if the price could turn itself around, get up to that level and push up through it, that break in and of itself could create additional buying pressure? That is certainly a plausible outcome and thought process to go through. So if you like to play falling wedge patterns, then definitely keep an eye on it. Next one here, TSLA Tesla, and very impressive move today. I mean, just Friday, obviously, it was all the way down here, gapped up, got above that trend line there, and just a very powerful breakout through that level. So I'll go ahead and get rid of that trend line as it served its purpose for now. But the new level that you got to think everybody and their brother's uncle is going to be watching resistance-wise is right up here at the $210 mark. You can see former area of support, then acting as resistance, and the price never got quite to it today, but got within the general ballpark of it. So $210 is going to be a very important level to watch moving forward, and you got to think a lot of breakout players probably going to be watching that area. So there could very realistically be some of that, self-fulfilling prophecy attribute that comes with it. As far as areas of support, I'll zoom back in here. Key level, I'm going to go ahead and grab this level now that it's no longer really relevant, but the initial level of support to watch right there at the 204 mark. And then after 204, the next levels you want to pay attention to are that 200 period moving average and the 50 period moving average right there. But all in all, no doubt about it, very impressive move today, very impressive recovery from that gap down movement on Friday. And now all eyes on $210. So let's see if the price can get the break. Next one, BOIL, an ETF that measures natural gas, and started this one last week, and it's basically a broken record. I keep saying the same things, higher highs and higher lows. So what a bounce, and the bounce continues. So congratulations to any of you that started watching the first video I did last week. I think back on this day right here, as the price has just continued to grind higher and higher. So we'll go ahead and get rid of that level as it served its purpose for now. First key update is just based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. So moving forward, the newest ideal level of support going to be right there at 615. With that being said, I say ideal because if the price falls below it, doesn't mean the entire chart's destroyed or ruined or anything like that. But yeah, if the price can stay above it, that would be a great sign of power. From more so the overarching standpoint, watch that purple line there, 50 period moving average, meaning that line will move itself higher and higher. So as long as the price stays above that line, as the line itself moves higher and higher, then the overall trend remains plenty in the bull's favor. In terms of levels of resistance, got to squeeze things down here. Next key area of resistance to watch very closely, and it's going to be a key level, is right up here at, what is that? $6.67. So 667, next key level to watch, definitely within striking distance. You can see through the history of things, has rejected the price. Purple, probably not the best choice. Has rejected the price down several times before. So can the price get up there and break through it again? That is the key question. But all in all, crazy move. And as long as the price keeps on putting in those higher highs and higher lows, that's what matters most. Next one, FUBO, and overall a beat down today. But what makes this interesting was, and this will mean a little bit more to those that have traded for a while, but I'm sure you've seen stocks that gap down, and then after that gap down, it's just to bleed and bleed and bleed the entire day. But that was not the case here. In fact, it actually has now put in higher lows. Now, let me be very clear, and I wish I could say trading was this easy. Just because the price put in a couple of higher lows does not mean for sure guaranteed a bigger move is going to come. My point here is it's at least valid to throw out the question of, hey, maybe just maybe this gap down was a little bit overdone. Maybe just maybe there's some now, enough bullishness here to, get some sort of movement back in the upwards direction. So like I said, obviously no such thing as a guarantee, but the rationale is there. Case in point, if the price was still just dropping, and I'm sitting here saying, hey, it's looking like there could be some strength, you would be totally justified to say, what are you talking about? The price is literally just dropping, but that's not the case here. It got the higher lows, so let's see if that is indeed any sort of leading indicator. I would say that a key level to watch support-wise right here at $1.93. If the price falls below there, then yeah, at that point, things start to look a lot more shaky. But if there is going to be any sort of bigger move to the upside, key level resistance definitely right there at the 209 mark. Next one here, TQQQ, which is an ETF that measures the NASDAQ. So if you believe that the NASDAQ market is going to rise, this one will also rise. Difference being this just allows you access at a much lower price point. And good move today. And this will mean a little bit more those of you that watched Friday's video. But I talked about that level right there being a resistance. And now that the price is back above it, as I've said, when levels of resistance are broken and closed above, you want to see them act as support. And though the price was never hit exactly today, I think we're going to agree, got very close right there. Even last 30 minutes, got very close. And so far, so good. That level has held strong. So a classic example of that resistance now behaving as support just like it did back here. So let's see if that can continue on moving forward, which brings us to the key area of resistance. Assuming this does hold as support and start to head back upwards, that's where this trend line here comes into play, which has been very stubborn whenever the price has gotten up around it in the previous times. But that will be the main breakout area, which puts the key breakout area right up there around $23, give or take. If the price does break down through that level there of about 22.05, next key overarching level would not be until down there around that 21.35 mark. So I would say this 22.05 mark remains a very, very important level moving forward, but you got to give credit where credit's due. Nice gap up, did a good job of holding up above this previous breakout point. So let's see if the price can get some more momentum and potentially get up there and do battle with that trend line. So that wraps up the top 10. Again, if you like what you saw here, then I want you to get signed up for the free training. Like I said, it'll be later this week, Thursday, March 2nd at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy this format, then do two things for me. Hit that like button, leave a simple comment down below. Those two things go a long way in communicating that you enjoy these videos. And as long as I know you enjoy, I will continue to put in the time and effort to get this content out to you. So again, get signed up for the class, hit the like button, and leave a simple comment down below. Thanks for watching.